We see a new report saying that CEO confidence is at a 6-year low here. What's the case being made right now amongst you and your other economists there at the White House that we can avoid a recession?
Well, look, there's always risks, but I think the best assessment of where we are today is we have an economy in transition. We're transitioning from what has been the strongest recovery in modern history to a period that can be more stable and durable growth. And when we look at those parameters, what's most striking is how well positioned the United States is in a very uncertain global environment to navigate through that transition effectively. We have the strongest labor market in modern history. We have real strong household balance sheets, and I think this is an underrepresented, view. Part of what the strong labor market has actually delivered is households have been able to build up their savings, pay down their debt. You see delinquencies at record lows, debt service as a share of income at record lows. We saw just today the Fed announced that the share of families that can cover a $400 emergency with cash is at an all-time high. So the American consumer and household are in a strong financial position. Now, that's not to discount the anxieties and the uncertainties that people feel, and obviously when you're paying more at the grocery store, then that affects you. Yeah. But if you look at the core drivers, the consumers, business investment, we are in a much stronger position than almost any other economy in the world right now.
Let's talk about the grocery store, Bill, or let's talk about inflation more broadly, because it's interesting also over there in Asia, President Biden talking about potentially reconsidering the tariffs on Chinese goods. This, in some way, people have been calling for a reduction in tariffs because it could have a pushback effect on inflation. Is that sort of what's behind it? And do we have any sort of timeline as to when we could see a rollback?
Well, it's something we're considering. You heard the president on that today, and I think we'll be, I won't get ahead of the president, but I think we'll have more on that shortly. But it's in the context, as you say, of a global challenge of inflation. We're seeing inflation across the world, and we know why. The pandemic has created the supply-demand imbalances, and then more recently, this war has added on to that. But we're seeing record inflation. The Eurozone over the last 6 months, 10.1% inflation. And so the question on our minds is how to train our focus on what is the president's top priority, getting those prices down in a way where we in the United States don't have to sacrifice all of the economic gains that we have made to date. And we've got a pretty clear orientation of how to do that here in the United States. We have to give the Fed the independence to use its tools. Yeah. We have to try to reduce costs for families, for typical families and the costs they're facing, and bring down the federal deficit. We're looking at all of those, and tools, any tools in any of those categories are things that we're certainly looking at.
Well, when it comes to inflation, what the consumer arguably feels the most outside of the grocery store is gasoline prices. And the U.S. has released oil from the SPR that hasn't had an effect really on gasoline prices. You're continuing to see some of those older refineries shut down. How do you increase refinery capacity?
Well, it's a great question, and you're right that the war in Ukraine has had the impact of not only taking the supply of Russian oil off of the market, but also reducing global refining capacity. I would say that the release of the Strategic Petroleum Reserve and galvanizing others to release, I think, certainly has had an impact on blunting the price run-up in oil. We do have real tightness in refinery capacity. Part of that is here in the United States, the private sector shuttered and took down a lot of refinery capacity last year, and so we're needing them to build that back up. But the thing that we can do right now is focus on both how can we increase supply. It's important to continue to focus on how to increase supply of oil, but also particularly in this refined product environment.
But at the same time, Brian, I mean, we're dealing with whether it's shortages or just higher prices, and really the two are sort of interconnected here. So whether you're talking about people paying at the pump, whether you're talking about groceries and the ability for people to afford that, or you're talking about things like the shortages that we've seen with baby formula here. These are all things that, at least on the surface level, the White House itself can maybe do a little bit more to try to provide some accommodation, if not complete relief here. Are there efforts that you think will be successful to do that?
Well, in each of the areas that you just said, we are taking historic actions right now. You talk about baby formula. The president is using the Defense Production Act. We authorized that in 2 specific use cases today. We're flying formula with Operation Fly Formula from Europe and other locations into the United States in an unprecedented way to make sure that we're doing everything we possibly can to speed relief. When it comes to supply chains, you're right. We have supply chain snarls around the world because COVID lockdowns have created these inconsistencies. Here in the United States, though, you look at fluidity through our ports, for example. The last couple of months, we've seen record fluidity. That's not an accident. It's because we have been focused on working with the ports. You said you'd have one on later. With the ports, the terminal operators, the truckers, the railways, to try to increase that fluidity, and it's making a difference. So absolutely, we're going to take action everywhere that we responsibly can. We're seeing that lead to some progress in other areas, but it's an uncertain global environment, so we're going to stay at this, again, focused on what we can do to reduce prices for consumers and also, reduce the federal deficit. We don't talk about it as much, but I think this president is doing more than anyone in modern history to really focus on how we can reduce the deficit. That helps to reduce price pressures in the economy as well.
We'll be talking about the supply chains and indeed if they are easing shipping bottlenecks, in particular with Rick Cotton in a minute from the Port Authority in New York and New Jersey. Very briefly, we have got this wonderful Bloomberg Big Take out there today, Brian, and I want to get your take on when we're talking about energy, you're talking about gas prices, talking about refining, but talk to us about just the risk of blackouts. Is this something that you are preparing yourself worried for coming into the summer?
Well, we're looking at anywhere where we may see physical supply disruptions. One of those areas right now is in diesel, particularly in the northeast of the U.S. We've been in a state of constantly monitoring and making sure that all the tools we have available are on warm standby to make sure that if we do see any physical outages or shortages, we're able to move and release reserves. As we go into the summer season, there's always risks. There's risks to the electricity grid, particularly in the face of more frequent and extreme weather. We know that wildfires in particular can put real strains on the electricity grid. So it's something that we are definitely monitoring in the context of the broader challenges we face.